Hello and welcome back to How About That Crypto, your home for crypto and Web3 news and updates with your host, Bitcoin Stylist. Today's news and updates is all about the crypto crash. FTX is bringing down the whole market. More contagion hits crypto. There is still contagion yet to be seen. And what's up with this hack of FTX? I'll explain it all in this wrap up over the last week. But first, please like, subscribe, comment to support me. I want to hear from you. The more you like, subscribe, follow, comment, and share, and make sure that more and more people get this, and it spreads the word of crypto. So do your part. I really appreciate it. And don't forget, this is not financial advice. Use links below to do your own research. All right. So you haven't heard from me in a week. I hope you're still in one piece and you're not obsessing over this collapse too much. I am obsessing, so you don't have to. If you lost your money, though, I feel you. I feel for you, and I know there is never too much information, even if it's the same information over and over. I don't know about you, though, but there's a lot of conspiracy theories, conjecture, and repetition of the same stuff. I've been listening over the week and not reporting because I felt like there was little value to reporting. Now I have a summary of the week. We won't talk about the Ukraine and DNC conspiracy. We won't talk about the sex tape, although I'm sure those would make for great clickbait. And they may be true, but they may be not. We're going to talk about what the investor, entrepreneur, and enthusiast need to know. So let's dive right in. And I'm going to share my screen. If you're listening on podcast, you can use the links below to follow along or just listen up. All right. So I found this really good article actually about kind of like a whole overview of even crypto. So I thought it was pretty cool. I highly recommend you check it out if you have time. But let me introduce this article to you. So this is an article in the National Review, and it's by Jim Garrity, and it's called "What You Need to Know About the Colossal Mess of FTX." I'm just going to read a little bit here. On the menu today, over the course of November, you've probably noticed increasingly dramatic coverage of the collapse of the cryptocurrency exchange, FTX. It turns out that the disheveled young so-called genius running one of the world's biggest cryptocurrency exchanges and a major cryptocurrency hedge fund, a man once touted as the next Warren Buffett, was making it all up as he went along. Like Bluto Blutarsky in Animal House. And if you're my age or younger, then you might not know who that is. In other words, the cryptocurrency titan, who was previously the Democrats' second biggest donor after George Soros, now looks like a younger, nuttier Bernie Madoff. I would say that sounds pretty close. All right, let me read a couple of pieces here just to kind of explain. This is like a little recap for those of you who are not don't know, haven't been following along. Let's see here. Let me find my little point here. Sorry. 1 second. Find my paragraph. Where is it? Ay. Sorry, y'all. I put a placeholder, but I guess I'm in the wrong one. Okay, so let's see. I guess I'll just explain to you. I'm sorry about this. All right. Well, basically, that's annoying. Sorry about that. Okay, so basically what you want to know is that FTX was essentially taking your money and using it to prop up Alameda Research. Now, exactly what the technically what exactly happened, we're yet to find out, and we're gonna find out more as time goes on. There is bankruptcy filing. There's probably going to be investigations. The DOJ is already looking into it. And FTX has basically taken your money and gambled with it. I mean, that's basically what happened. So FTX took money that you were using to trade cryptocurrency. You weren't necessarily getting any yield on it. You were not expecting it to be any risk. Then now it's gone because they were lying to you the whole time. The numbers on the screen were not real. They were just part of a computer program, and they were facilitating trading of assets just within their platform. And when people started pulling out and the question on the FTT token that they created came into question, the whole thing imploded. So we'll see if there's misappropriation of funds, lying to people and using their money, or if there was some fine print somewhere that says that they're allowed to do it. Who knows? But I would say that this is exactly why we need some sort of regulation, because technically, no one knows that they broke any laws for sure yet, except for all the lying and saying that believes in ethical stuff and he believes in, and he wants regulations. He was kind of putting on this whole front, and he's even said that it was all just a lie, at least in a interview that I read. So basically that's what's happening with crypto, and I mean with FTX. So the FTX exchange is just bringing down everything. Let's see, I got another paragraph here. Let's see. Yeah, I don't even know. I must have okay, here we go. FTX has since filed for bankruptcy, and John J. Ray III, check that name out, John J. Ray III, who is running what's left of the company, declared in the bankruptcy filing that basically no one at FTX left any records of what they were doing, and may well have never understood what they were doing when they were actually doing it. Ray wrote, I have over 40 years of legal and restructuring experience. I have been the chief restructuring officer or chief executive officer in several of the largest corporate failures in history. I have supervised situations involving allegations of criminal activity and malfeasance with Enron. I have supervised situations involving novel financial structures like Enron and residential capital, and cross-border asset recovery and maximization, Nortel, and overseas ship holding. Nearly every situation in which I have been involved has been characterized by defects of some sort in internal controls, regulatory compliance, human resources, and systems integrity. Never in my career have I seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information as occurred here. From compromised systems integrity and faulty regulatory oversight abroad to the concentration of control in the hands of a very small group of inexperienced, unsophisticated, and potentially compromised individuals, this situation is unprecedented. And remember, this guy cleaned up Enron, and Enron was a mess. If you don't know about it, go check it out. It's really interesting. But I mean, that's coming from somebody who's been doing this for a long time and has handled, absolute catastrophes. So this is a mess, and we don't know what, how is this affecting crypto? So let's talk contagion. All right. So the big there's a lot of stuff here in contagion. So I mentioned last week that BlockFi was going down. Voyager Digital is no longer in a safe place because FTX cannot bail them out. So we're screwed on both of those platforms. Also, there has been speculation about crypto.com. This so far seems to be a farce. We'll keep watching that. The industry is pushing to show a proof of reserves. So a lot of people, there's exchanges that are saying, oh, look, these are our wallet addresses. This is proving how much reserves we have. But at the same time, the money has been leaving exchanges and leaving those wallets as soon as they do the snapshot of their wallet. So, how valuable is proof of reserves? However, if we have their wallet address, we can just watch the money. The big worry, though, is Digital Capital Group, or DCG, which is a parent company of Genesis Trading, one of the largest crypto lending institutions. And they're also a parent company of Grayscale. The Grayscale Bitcoin Trust with over 600,000 Bitcoin. If you want to buy Bitcoin on the stock market, you could buy the GBTC ticker, and that'll give you ownership in the trust, which owns over 600,000 Bitcoin. It is currently trading at something like a 40% discount to the actual price of Bitcoin. And so it's a great buy unless they're going to go under. So what does that even mean? Let's find out. And now, one thing is important here. Coinbase custodies their crypto, and they have legal obligations to keep it safe and not trading it. So I have my doubts about this narrative that Grayscale is going to go under, but there's some information that I must relay. There's also some knock-on effects. What the fuck? Excuse my language. There are also some knock-on effects, like Solana coming under immense pressure, and there's like, concern about multiple projects on Solana and the overall ecosystem of Solana. But Solana has said that they have enough money to run their operations for a little bit, so I don't know that we should be worried too much about that. I think that if the prices go lower, I'll probably buy more Solana personally, just full disclosure. I'm not going to recommend you do that. Like, I have the utmost confidence in cryptocurrency, and not all projects are going to make it, but I think Solana has a good chance of it. So I like Solana. I also like ETH. I also like Bitcoin and some other coins. You can see my list in the link below. Now, this DCG and Genesis and Grayscale thing has really caught my attention. That and the fact that regulators and mob mentality is coming for crypto, but we're going to talk about regulation and the mob mentality in our next episode. But let's dig into this potential contagion impact. So this is probably the biggest news, I would say, in all of this that's happening. This article is by Pregambar Mohan Raj, and it's on Watcher Guru. DCG to liquidate its Grayscale Bitcoin Trust positions, question mark. This Genesis trading, all right, let me read actually a couple paragraphs. Genesis Trading, a company owned by Digital Currency Group or DCG conglomerate, stopped paying out at its crypto lending division last week. This sparked several rumors regarding Genesis's solvency as well as DCG's future. The narrative has also focused on the largest institutional Bitcoin investment vehicle, the Grayscale Bitcoin Trust, or GBTC, despite assurances from management. Remember I talked about proof of reserves? Well, people are like, hey, Grayscale, DCG, where's your proof of reserves? And they're like, we got the money, but we're not giving you our address. That would violate our security protocols. We're not just going to give away our addresses so people can start targeting us. Maybe that was an excuse. I don't know. But let's keep reading. I'm going to read a couple more things. The potential liquidation of DCG's Grayscale Bitcoin Trust holding was discussed at a recent board meeting. Oh, man, that's a big deal. Digital Coin Group might pay off some of its debts by selling the sizable investments in Grayscale Trust at a sizable loss. To fill a $1 billion shortfall on its balance sheet brought by Genesis's bankruptcy. So Genesis is having a lot of trouble. Genesis had money on FTX. They had a lot of exposure to 3 Years Capital, which I explained over the summer was a big bust for everybody. And so this is real. They're really getting hit now. And now DCG had to give them a loan, and they're just not sure that it's going to plug the hole. And so now they're considering maybe selling the Bitcoin in the trust. The problem is that's going to cause the price of Grayscale Bitcoin to go down. So how quickly can they sell those Bitcoin? I don't know. If they liquidate, that's going to cause the market to just drop even more. They're 600,000. The next, how many people own that much? None. Like 600,000 Bitcoin. That's a lot of Bitcoin. So anyway, this Genesis Trading was the largest lending customer to Gemini, and that's why Gemini halted earn withdrawals, and that makes sense. And if any of you had money in the Gemini earn protocol or portion of the app, then you knew you could lose your money. And I know you knew this because I had money in there, and the pop-ups in order to get there that I had to agree to made it clear that you can lose your money if the third party, if the counterparty isn't able to pay. But it does not seem that the rest of Gemini is going down. If it does, that would be catastrophic. So hopefully Gemini was not doing tricky stuff with their regular exchange customers like all the others. And hopefully Coinbase isn't either, because Coinbase is posting, on Twitter that, hey, we have Grayscale's Bitcoin in their Ethereum, and they have like $10 billion worth of Bitcoin and $3 billion worth of Ethereum, but they didn't provide proof. So, depending on what you think. You might want to trust it, you might not. I'm going to choose to trust it, but trust it that I don't have to necessarily worry, but I'm also moving my coins off of exchanges into a hard wallet, a cold storage wallet. And I don't know, I feel like that's a pretty good, smart move if you want to take that idea and think about it. All right, not advice, because you could lose your wallet or lose your keys to your wallet and lose your money forever. So there is a trade-off to leaving it on Coinbase, but I just can't lose any more money after losing money in Voyager this summer. Okay, moving on. All right, so we got I gave you the update. I gave you the biggest contagion knock-on effect. I told you about Gemini. We're going to watch Grayscale, Bitcoin Trust, and DCG and Genesis. And so let's go back to FTX. So as you might know, there is a hack where a lot of money has left the FTX. And so I have a article here by Timothy Craig on Crypto Briefing called "Who is the FTX Hacker? On-chain clues shed light on the situation." So I'm going to just read the beginning here. FTX was hacked on November 12th following the exchange's bankruptcy filing. The Securities Commission of the Bahamas claimed responsibility for the attack, saying it ordered the transfer of the funds to an external wallet. That's interesting because last week we saw a letter from the commission saying they didn't say that, but now this is confirmed that Bahamas did tell them to move the money. On-chain data suggests that the bulk of the haul was seized by a nefarious actor rather than a government entity. All right, so I'm just going to read a little bit here. All right, so who hacked FTX? The embattled crypto exchange was hacked on November 12th after hours after it filed for Chapter 11 voluntary bankruptcy. According to a November 17th court filing from FTX CEO John J. Ray III, an unknown entity transferred at least $372 million from FTX to an external wallet. FTX has been hacked. All funds seem to be gone. An admin going by Ray wrote on FTX's official Telegram channel. In response to the hack, a second wallet with connections to a Know Your Customer verified account on the crypto exchange Kraken started transferring funds out of FTX. A later filing from the Securities Commission of the Bahamas indicated that former FTX CEO Sam Bankman-Fried was operating this wallet and transferred funds at the regulator's direction to protect the interests of clients and creditors. This prevented an estimated $200 million worth of funds from being taken by the first hacker. So this is insane because Bahamas are like saying, you got to give me all your money in our wallet. Anyway, I think that's pretty crazy, but I mean, maybe they thought that that was the only way they could do it. However, now they are the 35th largest holder of Ethereum. So what are they going to, I don't know. What are they going to do with the money? And are they going to hold it? But there's also movement. There's also like swapping into ETH and like, what is going on there? I really want to know what's happening there. And it seems like Bahamas is really interested in being the ones to process this whole bankruptcy thing. So I wonder if the US is going to be able to get a stab at him. No pun intended. That was maybe not the right word choice. But yeah, let's see what happens. All right, so let me read a paragraph here. Crypto Briefing previously reported that the initial FTX hacker was Bankman-Fried operating under the direction of the Bahamian government, per a November 17th court filing. However, this theory has been cast into doubt in light of some more substantial on-chain evidence included in court filings by both John J. Ray III and the Bahamian regulators. It now appears that it was actually the second address transferring funds out of FTX that was doing so to protect the exchange's remaining assets. It's worth noting that the behavior of these two wallets is strikingly different. While the first wallet was swapped, bridged, and started to launder assets, the second has simply transferred tokens into a multi-signature wallet. Well, there you go. So that looks like maybe the Bahamian government came in after the fact and was like, "Whoa, give us whatever you have left, because you're getting hacked constantly." So, and then I also have this little thing here. This says proof that the Bahamas, this is another article telling you the Bahamas government did order SBF to hack FTX, but it does seem that there is more than one hacker. So anyway, that's your update. I know it's a lot to consume, and I'm definitely going to do a weekly update and maybe like 1 or 2 episodes throughout the week and just moving forward. So just know that. And yeah, so let me know if you have any questions. Did you lose money in FTX? Are you worried about any of these other contagion knock-on effects? Are there other effects that I didn't bring up? I would love to hear from you. So, be careful. Gemini and Coinbase are caught up in this. Grayscale Bitcoin Trust is caught up in this. And there's mob mentality with regulators and the masses trying to say things like crypto is dead, and what should we do about crypto? Is there going to be over-regulation? Is this thing going to survive, etc.? Well, we'll talk about that in the next episode, and try to have a good Thanksgiving, and I'll see you next time. Huddle on.